Morning, everybody. Hope you guys are doing well today. Welcome to the Cigar Lounge show, the year to date Cigar Lounge show, where we look at trades that are working year to date. My camera is sleepy. I'm sleepy on this early morning. Uh, but what's not sleepy is the trades we're going to be looking at. So I'm going to jump straight into it and we will look at what happened in the last week and compare some of those things. So, that being said, first off, options involve risks. They're not suitable for all investors. As always, you should consult with your financial advisor before engaging in options. Everything we're talking about today is backward looking and not forward looking, and it's for informational purposes only. So, with that being said, I'm going to share my screen. Oh, I have two screens. One second. There we go. I am going to share my screen now. Okay. So we go here we're going to look through each one of these real quick. We're just going to go through them pretty quickly. So let's do that. So to recap, it's been buy the dip season. It's been buy the dip season most all this year. This week we had some interesting little movements. So we're going to test all these trades that we've kind of been developing through through the last month or two, and figure out if any of them are still working. So, and I will put I will share the links in the test with you as well. So let's get started. The first one, calendarized Ironfly. Now this is the 12 months kind of looking back, which is not year to date, but I wanted to extend it because this trade seems to have done well last 12 months, whereas a lot of these year to date ones so far have not. So as you can tell, nothing this week broke that test. It seems to be still working pretty well. So I'm going to put that in the chat for you. Okay, keep going. We're working our way up here. So this is basically I reran all of these, but one of these this is actually a new test from someone in our Discord, Stephen V. Shout out Stephen V if you're listening. Thanks for the share. This is a put calendar, and this is an interesting one. This is a cool one. It's a put calendar in the Qs, and it is run year to date, and it's a 1-7. So you're selling a 60 delta put, which, as you know, means you're selling slightly in the money. We can look at that here. So opening price is 428. You're selling a 429 put, right? So slightly in the money, or 10 deltas in the money, really. And you're buying the put with the same strike. You're opening the trade 3:45 every Monday and Friday, and you're doing it only when there's any like gap up at all. If there's any type of gap up, you're doing it. You're exiting the trade at 3:55, and he put an opening fee and closing fee. So you would definitely want to play around with the profit, and things like that, or profit slippage. You'd want to put some slippage on there. But that was a cool test, and I'm thankful that he shared it for us. As you can see, we don't get a lot of QQQ tests, so I thought that was pretty cool. And again, what are we looking at when we look through these things? What are we trying to do? Obviously, your first thing whenever you're looking at a test is you go straight to P&L, right? But the ratio we want to look at is the MAR ratio, because what that's going to do is take your CAGR and basically compare it to your drawdown. And basically, the higher the CAGR and the lower the drawdown, the higher the MAR ratio is going to be. So when we look at these tests, we want to one of the things that we want to look at is MAR. So let's keep going. All right, week 4 of the year-to-date show of a call butterfly when we're down intraday 10 points. Interesting trade, right? You buy the call 50 points away. You sell 3 of the calls 15 points above that, and you buy the 2 50 points above that, which basically gives you a slight credit usually. And so, as you can see, I'm gonna actually rerun it. Yeah, we're good. We're saved. I'm gonna give it one more. There you go, a little bit better. Um, so this one is interesting because what you're doing basically is anytime you're down, we're going to collect a credit and play the up move. And we're going to play the up move by scaling out of this. We've got our nice fancy things on there. Cap profits require 2 price. So we're trying to make the butterfly as realistic as possible. But what's interesting about this one to me is that, this is an interesting way to play buy the dip. Now, what is your number one risk with this type of trade? Anytime you're opening a butterfly for a credit, that means that you're probably unbalanced and or you probably have a ratio going on. Both are true in this case. So your risk is going to be that you blow past that. You blow past that your shorts basically get attacked too quickly in the life of this trade because if you remember in a butterfly, gamma is going to be switching, right? So where at the beginning of this trade, depending on where you're at, let's assume it's at the money, you are might be neutral gamma, you might be short gamma a little bit, so you don't want a fast move. You don't want deltas to go against you too quick. But as the trade progresses, it slowly slips. Again, assuming you're at the money, to a positive gamma environment where that movement does start bringing in profit. So this is a timing trade, but you're 50 points away. So the theory is that if you're down on a day, you collect a little bit of credit and you're kind of playing that pop for one day. Worst case of this trade, and we can look at a trade like this, you opened at 47.50, right? And the last one you got out for the loss for 48.40, so almost 90 points above where were your shorts at 48.15. So you were 25 points past your thing. You could definitely put this trade where you exit at the short, but I don't like that on butterflies because there is a little bit of discretion to this, right? Like in real life, I would never have let it get this far. I probably would have closed most of these out. And you say, well, what's the point of a back test then? Well, not all back tests are mechanical, or obviously they are mechanical, but the idea is sometimes I'm more interested in the idea than the actual trading of the test, if that makes sense. Because I'm a cocky person who has learned the terrible things in life because I'm cocky. Um, I try to trust the test more and more, but at the same time, I also believe when I look at a test like this that I could beat this using the idea. There's a way I could probably trade this discretionarily and beat the test, but that's very hard to do sometimes. Anyway, I digress. So I'm going to save this. I'm going to share it. All right, let's keep going. Da-da-da. Here today, BC. What do we do here? Okay, yeah, save that. Did the call calendar. Um, yeah, there we go. Perfect. This is another one from Stephen V. And this is a call calendar on Apple, which again, we don't get a lot of these. So shout out to Stephen V for handing this out to us. What is this? This basically is a 411 calendar. So you're selling the 4-day and you're buying the 11-day. And it's year to date, so that should work out okay. Because what you're doing is you're buying at the money. It's a at the money calendar. And so for instance, like, um, 188 was the strike, 187.5 was the contract strike you do. This is a small sample size, because it's every Monday, but it's worth sharing because it's an interesting idea, right? And so far so good. I would want much more data to figure this out, but so far so good on that. So we'll keep going. Okay, this is one that I thought was interesting because as of last week, it had done a lot, uh, or actually by the end of January had done quite well. Have a pretty large drawdown. What's crazy about this one is even with that drawdown, that MAR ratio is insane. For having a lot of trades too, and that's where it gets interesting to me. It's one thing to have a giant MAR ratio if you have like two trades, but if you have like, if you start getting some validity to the data, that's pretty interesting. So what is this? Basically, it's tranching. I mean, it's a tranche trade, and so 25 delta, 0-day put spread, and it's 25 points wide. And you do it at the open, you do it at 10:30, you do it at 12:04. Why those numbers? Well, I try not to find like the best time to the minute. Those are randomized, so I just put things in. You could improve this or make it much worse depending on the time you do. But again, I'm looking at the idea of it, and so it's just tranching, and it's setting and forgetting. I mean, you're letting it play out. Um, I think I said last week, this one feels like risk of ruin is very high to me, um, because there's no stop, right? And so you would definitely, I think, in real life, want to stop on something like that or test it. But the idea is pretty interesting. So keep going. Let's keep going on sell it put spread time. This one's just farther up. It's tranche, but instead of the 25 delta, you're doing the 50 delta. Again, testing the validity of it. Um, you win a lot less actually with this one. The other one I think had 81 winners. Um, but you also are just doing well because you're collecting more premium. Again, risk of ruin is high with this because you have no stop. Um, but something you'd want to play around with and see if you're that type of trader. If you're selling those put spreads with abandon and a 12 VIX, 13 VIX, this one's for you. So keep going. All right, call butterfly. This one is you open trades between. This is an opening range breakout, uh, using that feature. So you open trades between 10:45 and 1 p.m. and you do that, basically, between the 9:30 and 10:30. So you're setting an opening range breakout range, right? So you're using the classic one, the 9:30 to 10:30. And basically, what we're saying is, well, anytime after 10:45, so we give it 15 minutes. Anytime after 10:45 and 1 p.m., if we've broken out of that range that we were in between 9:30 and 10:30, I want to buy a 50 delta call, 0-day. I want to sell two calls 40 points above that, and I want to buy one 80 points above that. So this is a butterfly, right? And it's an upside butterfly. And you're going to be putting it on for a debit, right? Now this one's interesting because the MAR ratio is crazy. Um, but two, we actually get to see what happens in real life with this one. This is a higher debit, so you on a day like Tuesday, right, where we had this huge intra-range movement at some point during the day down 100, um, that we broke out Tuesday really, really early, right? And probably at 10:45 we were above. the 9:30 to 10:30 range. Well, what happened is you can see the underlying just slowly decimated, right? And by that point, it didn't get back above range, and so you were done in the trade. Um, so that's the pitfall. That's the pitfall of that one. But the nice thing that I like about this trade is this. Most of these we've been full porting, which you should never do in real life. Everybody knows that because we say it all the time. This one's full porting, or most of them are. This one's only a 10% allocation, and I like that. I like that that one has such a high MAR ratio with such a low allocation. Um, we're gonna look at another one in a minute that a small allocation, actually a sprinkle, as they say, goes a long way. But let's keep going. All right, this is another day, another opening range breakout, but this time we're setting the opening range to end of day basically. So we say uh, if the range is 9:30 to 3. That's what we want the range to be. We've set that in option omega. And when we break out of the high only, we wait for we do it instead of waiting 15 minutes, we do it between 3 and 3:15. So you only get 15 minutes for this because we don't want to play the fade. We want to see if it broke out real fast. And this one's just buying a call. Pretty simple, 1 day 50 delta call. And we're taking profit at different times, different allocations, or sorry, different profit targets. We got all the goodies on there, required two prices and things like that. But as you can see, I mean, that's just worked this year until it won't. But so far, it has worked this year on the times that it has worked. It's poetic. It's worked on the times that it's worked. The Yogi Berra situation. Okay, so buy the dip. Speaking of buy the dip, this one's this one's crazy to me. I'll show you why. This is basically anytime there's a move down of 5 points. And remember the way option mega works, it's only going to really do that once a day. When in real life it's doing happening all day long. But anytime there's a move down of 5 points, uh, we're going to sell a 25 delta put spread 25 points wide 1 day, and we're just going to take 10% profit. And even on a Tuesday, it's interesting where you did this. You sold a put spread because we opened down, we gapped down because of CPI. This was a 2-minute trade. You put this on at the open, and we immediately rallied. Simply 5 points. But on that rally, probably vol came out a little bit. Now, as we know later in the day, it did not happen that way. But vol came out a little bit, and so you got out 2 minutes later with the profit target. And again, this is requiring 2 hits at profit target. So I actually do think that probably is exactly what happened to some degree. So this trade, again, 100% winner, 26 times in a row. Um, because there's no stop. I mean, the day that it doesn't, the drawdown is going to be huge on it. And so that's something you just got to pay attention to. But we're right now we're seeing what works year to date. What'll happen eventually is one day it won't be the case. This test will be terrible, and we will take it off the list of year to date, and we'll keep developing other year to date tests that seem to be working year to date. So that's how this show is working, which hopefully it does its job. Okay, couple more. This one, this one is one that this one's probably my favorite out of all of them, just because this is kind of how I like to trade. This is a call butterfly and a put calendar put on at 3:54. Basically, just right it before close. And I'm doing it every day, and I'm allocating 15% of the portfolio. And it's set it and forget it, right? That's it. And the put calendar is 100 points away. It's far away. The call butterfly is 25 delta and 25 points above that, and then 50 points above that. So it's a pretty symmetrical debit butterfly. And this is pretty undeveloped. I mean, that's the thing I like about this one. It's pretty far away. You would think, well, there's no way, but we've had some pretty crazy movements through the years. So a lot of your spy interested because the years on if we get super get into the bubble, um, and on our trade the the small little spring has done you know ratio. I will okay, keep going. Two more. This is that calendarized ironfly that we looked at the beginning, the 12-month. This is just year to date. So you can see we've had a giant drawdown, pretty big drawdown. Go log on it. But it still has done, you know, quite well. And again, this is a 100% portfolio. Just to show you that, let's go like 10 and see what would it look like. I don't know. I haven't tested this. So yeah, I mean, that's a lower allocation. That's actually probably a more realistic, better trade, right? A 92 ratio. Year to date, making 28% year to date would be, I think, okay with most people, in 6 weeks. So, um, yeah, but the basically again the calendarized fly is you're selling the 50 delta put and call 0 day, and you're buying 1 day wings 25 points out. And again, there's no profit target or stop loss. It's just exit conditions. I mean, there's the or no exit conditions even. There's just some miscellaneous like putting slippage on it and things like that. Um, and what's interesting to me about that, I like the idea of doing this one with the other with the put calendar and the butterfly because then you kind of have this a little bit of like a self hedge put in some ways with some you have some positive vega, you get some payoff if there's movement. You also kind of get paid as long as the vol stays a little bit bid. Um, you can run those together and see it, and if you put it in a portfolio, uh, how that works. Okay, last one for the day. The little engine that just keeps on going. The sell condor on an opening range breakout to the low side. So 9:30 to 10:30, you've got a movement down past 10:30, and anytime after 10:30, if we break below the 9:30 to 10:30 range, we're going to sell basically an at the money spread, 50 delta, 25 put spread. So right there, basically at that bottom of the range, and then a 25 delta call spread, making a condor. But it's kind of it's not a delta neutral condor. You're getting positive deltas on this trade from the beginning. And you got the exit conditions are either take a 25% stop loss, or after a 10% profit target, you set it to a trailing stop. So if your brokerage allows you to do that, that's in play. And this is beautiful because you can see what happens on Tuesday. I wanted to show this. So this is really the first time this year. This is the thing we've been waiting for. The underlying, immediately shoots up in the mornings, goes high, and then we break hard. We broke hard. I mean, we were down 100 points in ES at some point Tuesday. And so, yeah, your stop losses, you're going to get decimated, right? But again, what's interesting about that is even in the midst of those losses, you I mean, so far it has just been a buy the dip year. So we will see. We'll continue to monitor the situation as the government says. Um, but we'll be here together doing it. That's the thing I can say for that. So Anybody got any questions before we call it a day? I liked Tuesday's action. I like that rise in VIX. I like that we're going to have something to talk about other than just it goes up. Stocks only go up. That's not my favorite mantra. So hopefully, as the weeks progress, we're going to get some more of those type of moves. Um, if there's no questions, I'll let you guys go. As always, I appreciate you. Hope you have a good day. As always, you can reach out to us in Discord. And yeah, please, if you have any tests that you want us to consider for year to date, do that. And we will go from there. So, hope you guys have a great day. And for those of you who are watching who have no idea who I am or anything like that, optionomega.com. We've got all the info on there for you right there, the tool and things like that. So, hope you guys have a great rest of your day. And I'll talk to you soon. Bye bye.